Can we just dive in first to why this is not a repeat of the really existential jitters that shook regional banking in 2023?
Yeah, I do think these are one-off situations that happen in time, and we manage risk, and sometimes that risk comes to fruition. But the reality is the industry is well reserved, well capitalized, and has strong earnings currently. So those all serve as a strong buffer to any one-time credit shots that may come at the industry.
What's working in the favor of regional banks right now? Is it that that M&A is happening quicker? Is it the regulatory environment more broadly?
Yeah, I mean, you said it well. The regulatory environment is more favorable for our industry, and I think that gives us all a little bit more opportunity. Plus, we're just coming off a period of time of very robust earnings. Generally margins are heading higher here, and I think that's giving strong current earnings. Fee income was strong this quarter. So overall, things are looking up relatively well for the mid-sized banks.
You delivered earnings that beat analyst expectations. What's propelling your growth?
Yeah, same thing. We had net interest margin gains. We had strong capital. We had nice loan and deposit growth, strong fee income. We're also coming off one of our largest partnerships we've done in recent history, adding new locations in Wisconsin, Minnesota, and North Dakota. And that's all giving us a lot of tailwind as we head into the back half of the year and into next.
When you're looking at some of the big macro issues that are facing Americans right now, it's the trade and the tariffs, which in Minnesota and North Dakota and the like would be a lot of soybean farmers. You're looking at SNAP benefits being shut off, it's putting food needs at risk for some families, and then the government shutdown, which has federal workers on furlough not receiving paychecks right now. Are you worried about any of those factors ahead of the all-important retail season for the holidays?
There's no doubt about it. I mean, we would like to see the government come to the end of the shutdown here, and we are watching very closely how farmers are impacted by the tariffs. Hopefully, there will be some relief coming for them, and clearly, we want everybody to have those SNAP benefits. I'm optimistic that there will be a compromise here, and that we'll get back to work here just very soon. So those are things that should be resolved, and I think as long as they're resolved in a fairly timely fashion, we should have okay finish to the year.
I mentioned the high-profile bankruptcies of the companies that had put sort of regional banks back in the spotlight again. Are you seeing any of that? What does the default situation look like from some of your borrowers?
Yeah, we are not seeing that at all. I mean, the reality is most mid-size and smaller banks have very little exposure to the types of assets that we saw recently go bad. For Old National, that represents less than 1% of our total loans, and we just don't make those types of loans. And so I don't think it's really an issue. It's for the super regionals and obviously the largest national players that have much more exposure to that type. We are Main Street lending, mom and pop businesses who continue to run our country.